When you remove layers, simplicity and speed happen. Ginni Rometty. My friends, we have removed the layers. We have worked so hard to hone these charts down to what they have been for the last several years. Those of you who've been with us for many years, you remember how we first started, the different indicators, the experiments we did, the things we tried. And of course, the longer I did this, have I been doing this? Let's see. The show's coming on 10 years, but I've been trading for 15, 18 years, and I've gone through all of it. In fact, what you have now before you is the result of Thom being stupid and learning over the years. And again, always working based upon Occam's razor, the simplicity principle. That which is simplest is going to function best. As Einstein said, though, make things as simple as possible, but not any simpler. In other words, do what works and keep it as simple as possible, because simpler is better. Think about it. You have a complicated engine in a vehicle, it is much more likely to tear up on you, something go wrong, as opposed to a simple engine that functions. And again, the way we set all of this up is you don't have to be right every time. In fact, you can be wrong the majority of the time, as long as you do what? Limit your losses and you let your profits run. And we have a very simple mechanism for doing just that. In fact, it is, again, I'll tell it to you really simply, just to say it one more time. When we enter a trade, we use this little widget over here, the long and the short position. We set it up based on our entry point, and we set it based up on the ATR off the 2-day chart. We use one time the ATR, that's the average true range. So again, we're using the average true range over the prior 14 periods, so that'd be 28 days on the 2-day chart. That gives us, again, a feel for the most recent volatility. And what do? Well, we use that to set our profit and loss bands. If we hit one time negative ATR, then we pull our trade. That means it was a loser. If we hit one time positive ATR, we sell half the trade and we allow the other half to run. By doing that, we give ourselves every benefit that you can get out there by what? Stopping your losses, cutting them short, and letting your profits run when things work. It just makes sense. Let's jump into these charts. Again, you interested in what we do? Go to chartingwealth.com, sign up for the daily review. Each and every day we'll send you a great training that comes along with the review of the market. Practice trade with us, learn by doing. It's just that simple. Don't worry about how long it takes. Worry about finding 10 to 15 minutes each and every day to follow the charts, because if you do that within a certain amount of time, you will become a charting master. You will slowly understand. You will learn. You will develop skills. And once you do that, you'll make up for all the time you ever spent. Don't worry about how long it takes. Worry about finding the time to do it. Now, we're here 10 minutes before the market closes. S&P is up 0.17%. We do have a bigger candle this week, higher than last week. We see volume as we move into Tuesday. We might get up to average volume this week. Things keep going. We look at where we've been on the 2-day chart. Average volume back on the Wednesday, Thursday of last week. The Friday, Monday, not quite average volume. We're not even halfway to the volume on this latest 2-day candle that'll finish drawing tomorrow. We can see where things were up some in the morning, a little further up in the afternoon. But I'm trying to see, did we hit the high of yesterday afternoon? That was 548.53, 548.62. Yes, we did. We went a little bit higher. So again, as we follow the charts, we see on the 2-day and the half-day, we are well above the weekly trend line. It's only connecting the this week's and last week's candles. That's okay. We like to have 3 if we can find them. We'll move on to the NASDAQ 100. It's down just a little bit. Might be up before the end of the day. Down 0.02% right now. So pretty much flat. We can see where high volume on Monday afternoon. Things peaked up. We haven't hit that again up in the morning. And about the same in the afternoon. We are decently above the weekly trend line on both the 2-day and the half-day. And, of course, the weekly reaching a higher high. Nice. That all, of course, as we've seen, for at least for this week, that happened primarily in the afternoon on Monday. So we'll keep an eye on things. What about 20-year U.S. government bonds? Well, they are up for the day 0.86%. We see on the prior 2-day candle, which was, well, let's see, on the prior 2-day candle, excuse me, we hit a higher high. Didn't have average volume at that point, but we did hit a high of 94.84, where we are now 94.60. So we've not hit that higher high. Of course, Monday was a down day, and then things trying to recover, but not hitting the prior highs for that Friday, Monday. And again, we'll keep an eye on things. We didn't pull the trigger on this trade because we didn't have any volume backing us up when we had the transition and the turnaround. And of course, if we would have gotten in it, we'd have ridden it up a little bit, probably pulled out here with a loss, because we didn't know what was going on. That's why we use volume. Volume tells you if the price is supported by the buyers or by the sellers. So again, price is so important. If you've not taken our training zone volume, you're not understanding half the picture. Heikin-Ashi candlesticks are great. Volume with Heikin-Ashi candlesticks and trend lines tells you what you need to know. Let's look at where we are with gold. Gold is up a little bit for the day, 0.42%. Let's look at where GDX is. Gold miners, that's been good to me lately. Oh yeah, gold miners up for the day also. But again, let's see what the low of lows was last week. 35.11. This week, 34.42. So we have reached a lower low. That's good to see. So things still pulling back. We'll keep an eye. So gold miners is up for the day after 3 days of down movement. Let's go back to gold, which is what we are keeping an eye on. We can see that we have a sort of a doji, not much of a candle at all this week, a little bitty candle. Look at this. 3 dojis in a row here on the 2-day chart. Again, not even getting up to average volume here. As we look, excuse me, on the chart for Tuesday, we can see where we're just pushing above that weekly trend line, doing the same on the 2-day, and the weekly just sitting right there on it. So, hard to tell what's going on with gold. That's one reason that we, of course, did not pull the trigger, because we didn't have any volume backing us up. I keep telling you guys, this is summertime trading zone, the hardest, worst trading zone of the year. We get into the fall-winter trading zone, it's typically much better. That doesn't mean the market's going up. It means that the moves tend to be more prolonged, more clearly seen, because you have more volume. I keep talking about volume. Why? Because volume is so important. If you don't understand volume, you don't understand anything. Okay. Lastly, we will take a look at HODL. It is down 4.06%. What do we see going on there? Well, again, moving into that second week of down movement. Look at the first day of this latest 2-day candle. It is jamming down. We can see where we had things pop up Monday afternoon after, 2.5 days of down movement. And then resuming on Tuesday, further down in the afternoon. I'll tell you one thing I pulled the trigger on last week was wanted to mess around with the ProShares Bitcoin strategy short, which I did. We're in the green here. looking to hopefully make 6.92%, could lose 16.92%. As I saw things transition around and as I've been watching Bitcoin, didn't have volume back me up on this. This is just an experiment. Didn't put a lot of money into it. You could call it a fractional trade. It's more than a fraction, but I just wanted to learn by doing. I do this stuff all the time. I hope that you are doing practice trades, not telling you to use real money like I do, but I would encourage you to consider practice trades quite often. Again, when you start getting good and want to put just a tiny little bit of skin in the game, look at this. You can buy these shares for $4.25. You could buy $100 worth of this. If you lose 20%, you lose $20. If you can't lose $20, my friends, you need to find a better job. But again, don't want you to take any risk, not giving you market advice, just telling you about the things that I'm experimenting with. I used our rules as far as how to set my profit and loss bands based upon one-time ATR. Of course, I set the profit and loss bands up here based on my entry point on Friday afternoon on the half-day chart. That's how you do it. You try to set it here on the weekly. It'll start you at the beginning of the week, which is not where I got in. So anyway, just messing around. I was surprised at how liquid this was. I could not believe the difference between the bid and the ask was like a penny. So anyway, I went ahead and pulled the trigger. We'll see if it works. If it doesn't, I'll close it. If I have to take a loss, I'll take a loss. But again, learn by doing. I encourage you to practice trade every chance you get. The stocks, the ETFs you're interested in, if you're in a certain business sector and you are really fascinated by what's going on there, again, practice trade the things you know or you want to learn or you're fascinated by, whether it's commodities, whether it's metals, oil and gas, whatever. There are ETFs in every category you can imagine and sectors. So have fun. This should be fun. I love it. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.